Good evening, traders. Nice to meet you all. So, the previous video, I have posted a video saying what to expect in the FOMC meeting, which is supposed to happen on 19th or 20th of September 2023. That is, tomorrow we do have a meeting here. This is September 20th. So, we have 11:30 p.m. We have Fed meetings. Okay. So, this video is in addition or with continuation of that video. A small brief recap. Weekly, the market is at ascending triangles is a resistance and it's trying to break it up. Fine. And then the daily, this is a swing, and this is where the region where it is the area to focus on. So let's see in 4 hours. So here, which I have said is, so this is a swing for daily, and in 4 hour, I said this was a triangle here, which I have drawn. Maybe I'll just draw it again. Give me a minute. Yeah. So likewise, I've drawn. Since after this breakout, the market is went up. So for the daily swing, the market started moving in a impulse wave. So now it's for our higher high, higher low. Then this is higher high and higher low. So this low has taken a support at this previous swings high or top. Fine. So now in 4 hour, so as still I said, the daily is in a bull swing. Okay, so the swing has not yet completed. Fine. In 4 hours, if you see, it's this is a swing. This is again bull swing. So the higher time frame daily is in a bull, and so 4 hour time frame is still in a bull. So low, high, and higher low. So we are still in a impulse of a daily time frame. Got it? So now here, since it is a swing, and the retracement of this swing is, it is 38%. You see here, so this is 38% and this is 50 here. So somewhere between 38 to 50. So more or less, it's more than 38% of retracement market has done, which is a pretty decent one, not bad. Okay, for this swing, I'll draw again. I circle the swing here. Okay, this swing. So let's see how it is appears in 1 hour time frame. So this is area. So low, high, higher low, and this is lower high, and then double bottom here, and then this is a neckline. So to have a more clear look, I will give it here. So high. So this is low, high, higher low, then lower high, then double bottom here, and then this is neckline. I'll show it more clear structure in 30 minutes maybe. You see here, this is the double bottom, and this is the neckline break, which is in 30 minutes. Even the higher time frame has more better confirmation that if you see this 1 hour candle has very solid closure above this double bottom here. So considering the 4 hours swing has completed its corrective wave, and it's now started, it's gonna start its impulse wave, and the risk reward ratio for the targets have marked over here. So this is the range of a target. This is the two ranges. The first range is um, where is it? Okay, so which is 83.4435, and the other target or the other range of a target is 83.4947. Okay, so your risk would be this one here, 83.1910. Okay, if a 4 hour candle closes below that level, you can close a position, and this would be your target range here, this and this. So the first range of target would be, as I said, which would be 83.4435, and the risk reward ratio for that would be 1:3. And if your target is the higher range, then which is 83.4947, then your risk reward ratio would be 1:4. So the risk reward ratio looks what do we call, big and beautiful, but as I again says, we do have a Fed meeting tomorrow. Tomorrow there is a trading session in India, but the FOMC meeting, the results will be announced at 11:30 p.m. IST. So at that moment, the Indian market won't be, the trading won't be there. As already said, the expectation is to retain the same interest rates, that is 5.50, not to increase or decrease. So if the case one, if the interest rates, there is no change in interest rates, the market might not be volatile. It might be like slowly moving in range or maybe sluggish. or there could be other scenario as well where the market is already at the what do you call weekly resistance zone. So the market could be something like this one, it can behave like this. So if you see here, there is a still gap here. Fine, you can see there is a lot of gap in here. So the market can come down for a correction, again hit this support line of the weekly ascending triangle support. Reason, the other meeting is supposed to happen on October and November, and one in December. October or November and one in December. I think the calendar which I posted in the previous video. Fine. Yeah, if that happens, for sure there will be an increase. Then the time to which the meeting commences and where the interest rate is supposed to go on, till then the market might cool down till here, and then it might come up here. So it can start again bouncing back, taking a support here. At the time of taking a support, or the market is in bull from here in that full swing, then there may be interest rates increase, and which will coincide with the breakout of this ascending triangle pattern. That can happen. So these are all what will approximations which I'm telling. This is not like, which will happen. So maybe cases happen. In case if unexpectedly the interest rates go up to go above 5.50, so it can be any portion of increase. The increase can be 0.25 or 0.50 either. Fine. If it goes up, then that will support the technical analysis. That is, the ground result will support the technical analysis, keeping the USDINR is in bullish. So this 4 hour swing will have some volatile, and then it will take a smooth push to your targets. So this can happen. And as I already said, this weekly current market is at weekly resistance zone. So do um caution with trade in case if you are wanted to be and enter this market, because tomorrow morning the market will be open at 9 o'clock. Yes. So that point, have a very tighter stop loss, and um, trade with them. It's okay, do not lose any. Then we'll see tomorrow at 11:30 p.m. during the FOMC meeting. Then I'll post what is the results, and we'll see whether the trade is going to hit a target or it's stop. But my view is it's in bullish. So for this particular 4 hour trade, if you anybody wants to take a trade, which is a very beautiful trade, 1:3 and 1:4, but have a very tight stop loss. Trade with caution, with cautions which I've said, that the current technical point, the market is at the weekly resistance zone, and the ground reports, which the interest rates, there won't be any changes expectation, and if it goes beyond the expectation, the market could be a little slow down, or it can be sideways, or it can fall back again here, cool down a bit, and then the next meeting that will support the market to push from this weekly's trend line. Okay, so that could happen. So these are certain approximations. But if anybody wanted to trade at 4 hour time frame, considering that this looks beautiful, and if you feel that this is true, this works well, you can consider this one as well. So this is very beautiful trade. And do write your comments, do give your feedback. And I could see a couple of comments in my previous video as well. um, it was very welcoming, and I was so astonished. I didn't expect that now I would be getting um, comments. Um it was good comments, yes. Thank you, I appreciate that one. And write in case if you have any anything else you have in your mind you want to ask, you can just write it down. Or if there is anything that I have missed out, or I haven't seen, or I have missed out anything in the analysis part, please do post that as well, which will be learning for me as well. Fine. We'll see you on tomorrow. Maybe after the FOMC meeting, I'll post the comments on what's there, and what's the next move. Let's wait for this trade to do what direction it takes in. Fine. Happy trading. Over and out.